Welcome back. I'm Pratap here. Today is 5th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Yesterday we have identified 5 high liquidity zones. Out of these 5, 2 trades are executed. Actually, strictly speaking, 4 trades are executed and 2 are valid, and the third one is executed during the last 30 minutes of closing session. So mostly we don't take intraday trade. And the fourth one is already executed, already tested zone. That is the reason why we didn't plan trade in that. So let's discuss these trades. Even before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons I kept in a playlist at our YouTube channel. So at a NeoStock YouTube channel, from homepage scroll down to the playlist supply demand zone price action course. Click on this playlist, you will get into this page, and here you have all the training videos. Even I have provided the link to this playlist in this YouTube video description. If you click on the link, you will directly get into this page and then scroll down to the bottom of the page. Here starting from lesson 1.1, all the training videos are available in an order. So please go through all these videos one by one and strengthen your skills related to supply demand zone price action. Now let us get into the analysis discussion. So before we get into high liquidity zones, look into this bank Nifty. This is the one I analyzed in the video, Nifty, bank Nifty, supply demand zone chain. So at present this 5 minutes high liquidity demand zone is acting as a strong support. Already yesterday you got an entry and it gave you a very good return until this 15 minutes target, and after that this 15 minute supply zone is pierced. That means it is violated. Because it is violated, see today what happened, very easily the zone is, because there are no pending orders in this, so easily it passed. But even before that, today morning at 9:16 candle, you got an entry here, and from here till this level it has given you 500 points in bank Nifty. If anybody would have planned a trade at high liquidity zone at this area, you would have got a very good profit. So it is acting as a very strong support. So this is one of the powers of high liquidity zones. I just want to tell you this. Now let us get into. First let us look into AU Bank. We got a successful trade and gave a very good return, and some interesting concepts also I should explain to you. Even though I explained these concepts earlier, some around a month or 1.5 months back, but any new members, if they want to listen, it will be helpful to you. The concepts like trailing stop loss. When you are using trailing stop loss, what kind of techniques you have to use. Let me share some of my experiences. It will be helpful to you. Even before that, look into this supply zone. Drop base drop. Now it got EMA confluence. And this is moreover it is a bearish overextension. The bearish overextension is completed here, and now again prices are moving down. Earlier there is an overextension, and after that overextension is completed when prices are moving in a narrow range within this area. Consolidation. I already told you in our EMA confluence session, the overextension can be completed in 2 ways. And this is one of those 2 ways. Until the EMA confluence, prices will be moving in a narrow range. The second method you already learned, prices will go down and again start moving up. That is the correction in the market. And overextension completed, then again prices will go down if it is a bearish overextension. So that is one advantage for getting a good success in this zone. And now let us look into the high liquidity area. This is the one we already find. I already explained this concept. This is not a new zone to you. This zone I already shown you in the earlier analysis session. Whatever we fine tuned today, exactly there the prices came. Here we have a 75-minute zone. We have a ERC candle, base candle, drop candle. Inside we identified 15-minute zone. All these points I already explained to you. You know this is the zone already we drawn. It's not the zone drawn now. This is the one we have drawn almost some 4 or 5 days back. See here the trading view data, again it is showing the wrong way in 5 minutes or 15 minutes. 75 minutes it is not showing. Earlier it's shown in 75 minutes. Okay, now again it came in 75 minutes also. Something wrong with this. Today morning it is not there. In 75 minutes as well as 5 minutes this candle was not there. And afternoon what happened? 75 minutes this candle was not there. Only 5 minutes and 15 minutes it's shown. Now it is showing again in the 75 minutes also. And in daily it's normal. I think something wrong at a trading view regarding this candle. So that is the reason why yesterday I suggested you go for a trade in this zone if prices come. See today prices entered into this area. This 5 minutes fine-tuned area. Inside 75 minutes we have 15 minutes. This is the light red color is 15 minutes. Inside this dark red color is we have a leg candle, base candle, drop candle, ERC candle. So this is the 5 minutes area. This is the one already we drawn few days back. This zone we have drawn few days back. And also there are some price action clues also I explained. Just before entering there is a strong order flow. So definitely we can take a trade. And the blue color line whatever I am showing you, that is the stop loss after adding the stop buffer. Those who already completed your sessions about supply demand zone courses, when you land from outside, you might have learned 2% of daily ATR is your stop loss buffer. That is this blue color line, what I have drawn. That is your stop loss. Because we are taking entry at 5 minutes. So just above the 5 minutes, the 2% ATR you need to add to your digital line. If prices go beyond this blue color line, you need to, that will hit your stop loss and you need to exit from the trade. So this is our trade plan. And those who are learning supply and demand zone training program at NeoStock channel, in the next lesson you will be learning about this stop buffers. I already announced stop buffer is our next session. So at the time you will understand how to calculate. Once you learn these stop buffers, I will also provide daily ATRs also and during everyday's reports. So that for all the stocks I will provide you so that it will be useful to you. Because in our software already ATR is there. ATR I developed somewhere in 2016 if I am not wrong, that indicator. Okay, today prices entered into this zone, slightly pierced and then turned back before this stop buffer. See how this stop buffer protected our trade. It just crossed the digital line of this 5 minute zone, but it didn't cross this stop buffer area. That way it has given a very good profit. And because I am saying you profit, right? How to capture the maximum profit, I will explain here. There are different ways people might have exited here. One is there is a gap area, probably some people would have exited. Some people would have taken the risk, probably they would have exited in this area. Here we have a zone. We have a ERC candle, 2 base candles and a rally candle. That way, some people would have taken even this also, your reference. drop, base, rally. So probably you might have exited here. But how to capture the maximum profit? Previously I explained you a concept called trailing stop loss. So if you would have followed the trailing stop loss, you would have gained a very good profit. See here, this is the place you need to exit actually in today's trade. But I already told you that when you want to implement trailing stop loss, there should be a clue. What is that? Near to your zone, there should be a 5-minute supply zone should be there. Near to your 15 minutes demand zone, just above, if a 5-minute supply zone is there, then you can take the risk. And you can go for trailing stop loss. Even something wrong happens, near to this zone, you will exit. That way you will not lose profit. Maybe from your expected profit, a small amount you will be losing. I will explain that now. So please concentrate. See, the first thing is we have a gap, pro gap. Many times what happened? Prices just enter here, and in this gap area, if there is an order flow, probably the prices will immediately go back. If you don't exit here, you will be losing your profits. You get profit, but you will get a very small profit. It looks like we may feel like it is a greediness, that's why we didn't exit and our profit margin is reduced. That is the generally we blame ourselves, that is the way. But when you follow certain techniques, you will understand how to grab maximum profit. And the technique is a trailing stop loss. But in trailing stop loss, if you want to follow, because this margin is a very, very small margin compared to this margin, this means, let me draw a demand zone. See, from the blue color line to this entry point profit and this demand zone to entry point profit, you compare. Generally what happens? This is more profit, this is less profit. When you have pro gap area near to the zone, instead of depending on 5 minutes zones, trailing stop loss, generally we use 5 minute zones. Instead of using 5 minutes, we will use 1 minute zones. Because 1 minute zones will give you an early opportunity to exit from the trade. You will not lose. But the biggest problem with the 1 minute zones is there will be more whipsaws. Because of up and down, sometimes you may get a little early exit. But if the supply is very strong, 1 minute works like a very excellent thing. See today what happened? This is 1 minute. If you really want to exit, just before this, you have a 1 minute. This is the 1 minute. Supply zone. This is a 1 minute supply zone. See, this blue color area is a pro gap area. In case, if something wrong happens, see today supply is very strong, prices moved down. Let us assume demand is strong. Within this pro gap area, a lot of institutional pending orders are there. And these pending orders are much more powerful than the supply. Let us assume much more powerful than the supply. In that case, what happens? This demand will consume all the supply and pushes the prices up. That way, where you need to exit, if this supply zone is violated, 1 minute supply zone is violated, at the distal line, you will exit. That means your profit margin is going to be like this. From here to here. This is only your profit margin. So this is 4 rupee 50 paisa for one stock. In case, if you would have exited at this blue color pro gap area, you would have got ₹5.90 instead of 4 rupee 50 paisa. Maybe you would have got another 1 rupee 40 paisa additional profit you would have got. So by sacrificing that 1 rupee 40 paisa, you want to go for trailing stop loss, because it is very near and it's an excellent thing. If we get, in case if the demand is weak compared to the supply, the prices will further go down, right? So that's why we have taken a decision based on the 1 minute instead of 5 minutes. 5 minutes when you will take near the 15 minutes demand zone, if there is a good distance from your entry point to 15 minutes demand zone, at the time you will use 5 minute zones instead of 1 minute zones. So here I want to mix both the concepts. Which concepts? 1 minute as well as 5 minutes. Until pro gap area, I will depend only on 1 minute area, because the distance is very limited. And when prices are nearing to this 15 minutes, first 15 minutes demand zone, there I want to go for trailing stop loss concept with 5 minutes supply zones. So this is the way I mixed both the concepts. Okay, now 1 minute area worked and none of these 1 minute supply zones are violated. This is the 1 minute supply zone not violated. Next 1 minute supply zone, again here you have maybe you can say this is your drop candle, these 3 base candles and another drop candle. That way you can treat 1 minute level. Or if you want to shift to 5 minutes time frame from now onwards, below this blue color line, go for 5 minute zones, nothing wrong. So where is any, below blue color line, see here you have a ERC candle, say this is a base candle and this is a drop candle. Hidden body is there. If you add the hidden body, it will get some more body. Definitely this is a leg out candle. And where is this? This is near to the demand zone. See here. Now what will happen? Now we are changing the strategy now. Now our strategy is based on 5 minute supply zones. Prices came very near. You didn't exit at the pro gap area and now market is in our favor. Prices came near to the pro gap. Here you have 2 options. Let me delete this first one. So this is a 5 minutes supply zone. Prices entered into this. You have 2 options in this candle. So in this candle you have 2 options. See there is a gap is there. You fill the body. Now you will get a drop candle. Now do we need to exit here? Or shall we sacrifice this margin, small margin, and let us take chances with the trailing stop loss? That way you have to take a decision. Okay, what is the difference from here to here and here to here? How much money we are going to lose? Lose means how much profit is going to be reduced. It's not going to lose. Sorry for my wrong word. How much profit is going to be reduced? Let us check on that. So let us draw the info line from here to here. Okay, approximately 7 rupees profit you will get. If you are using trailing stop loss, and if your trailing stop loss went against your analysis, that means market reversed from this demand zone and move up, you will exit here. Now your profit is going to be this blue color line. This info line tells 7 rupees profit you are going to get. In case if you exit at this demand zone, how much profit you will get? Let us draw one more info line from here to here. This is the second info line. And what it is telling? 8 rupee 90 paisa profit you will get. That means if you are willing to sacrifice 1 rupee 90 paisa profit, when you will be losing 1 rupee 90 paisa profit, if your analysis goes wrong, market moved up and this 5 minutes demand zone is violated, then probably this is going to be. And if you are only 1 rupee 90 paisa, you will be losing. Still you will get 7 rupee profit. You are happy with that. Then what you can do? You can go with the trailing stop loss. That's why I suggested, if the demand zones are very close to the 15 minutes target, your 5 minutes demand zone is very close to the 15 minutes target, at the time you can go for trailing stop loss. That is what I suggested even earlier also. I already kept that video in our NeoStock terminology playlist. I explained about trailing stop loss. There I explained these strategies. But those who are listening first time, remember this technique. Same thing I already explained in a video which is available in our NeoStock terminology playlist is there. In that it is available. There one of these videos. Okay, now what happened? This supply zone is not violated. Now again new one. Rally base drop. Now change this. Now this is going to be your new. Suppose if the analysis went up. I mean, your analysis is went wrong. Now prices are moving up and this supply zone will be violated. Here you will exit. And now this is more close to this 15 minutes demand zone. Whatever the additional amount you are going to lose is negligible. Okay. Now what happened? Prices went further down and again a new zone is created. We have a leg in, 3 base candles, again a drop. Now again you adjust your so this will be your new supply zone. If this supply zone is violated, you will exit from your trade. See, prices came down, again see prices moved up from this supply zone, 5 minute supply zone, picked up the orders and again prices came down, further came down. All these are all base candles, rally, drop. Here we didn't have proper zones. And here also base candles are there. There is no proper leg out. Now we have a leg candle, 2 base candles and a drop candle. See, until here price is down. Now we have drawn a new 5 minutes supply zone. We have a drop candle and from here again prices turned and started moving up and violated this 5 minutes supply zone. Now here you need to exit from your trade. Now this is going to be your profit. Let me draw the info line. So approximately you got 14 rupees 75 paisa profit. Approximate value. This is your profit. See, if you would have exited here, let me draw the lines, horizontal line. If you would have exited here, or if you would have exited at this 15 minutes demand zone, how much profit you would have got? Let me draw the info lines. This could have been your first profit. Those who exited, you would have got only 5 rupee. How much? This is around 5 rupee 80 paisa. Okay. Around 5 rupee 80 paisa or 6 rupees profit. 5 rupee 80 or close to 6 rupees profit you would have got. If you would have exited at this 15 minutes demand zone, probably you would have got a profit approximately 8 rupee 90 paisa profit you would have got. Now based on this trailing stop loss, finally you got 14 rupees 75 paisa profit. Now I am considering this trailing stop loss based and how much profit we got actually, because our high liquidity zone has given you that opportunity. Whether really you took this 14 rupees 75 paisa profit, or you exited at 80 rupee 90 paisa, or you exited at 5 rupee 85 paisa profit, that is up to you. See, whatever it is, whether it is small or big, profit is a profit. But how much opportunity our high liquidity zone has given, that is more important. And how much it has given, there should be a logical reason. We should not say, see here, because it went up to this bottom, I cannot say, this is up to here, it has given profit. There is a logical reason to get this profit. If without logical reason, blindly you cannot say, this is my profit. Whatever today's low, you should not say, that is your profit. There should be a very strong logical reason. If you would have implemented that logical reason, you would have got this profit. But who is the reason providing this profit? Obviously, our high liquidity zone. So this is the way AU Bank has given a profit 15,600 rupees. Profit booking based on 5 minutes trailing stop loss. Actually, we mixed 1 minute and 5 minutes together. I used a mixed strategy. But finally, it is we exited based on the 5 minutes. I have in the comment section, I have booked the profit based on 5 minutes trailing loss. How we booked the profit? 15,600. And which is a 12.9% ROI. It has given 12.9% ROI, return on the investment based on one futures lot. So it is an excellent trade. And moreover, this zone we have already drawn few days back. You are all aware of this zone. This is already a drawn zone. Whatever we have drawn few days back, same zone today prices went there and gave you. The only difference is slightly, maybe today demand is very strong in the morning session, slightly this zone is pierced. So by the time demand is, it consumed, because a lot of liquidity is there, it consumed all the demand, today's morning demand. That's why slightly pierced and then reversed back. Probably institutions again, they added a new orders here, see? Drop, base, drop, they again added a new order flow here within this area. Maybe that could be one reason why. Because in high liquidity zones, institutions again and again they create new orders. This is a classic example, drop, base, drop. Because they know this is the area, high liquidity area. They don't want to violate this zone. Probably if they violate, their order flow will be disturbed. There are a lot of calculations in institutions' minds. That's why high liquidity zone is a special zone that always gives at least a good guarantee for us to get the profits. So this is about AU Bank. The next one is, the next profit we got is IRCTC. Let me open IRCTC. This is a 75-minute zone, high liquidity zone. So let me go to 75 minutes time frame. This is a 75 minutes. Demand zone, high liquidity demand zone. Here we have a ERC candle. This is the leg-in as per the suggestion given by our software. And 1, 2, 3, 4 base candles and a rally candle. So this is what the IRCT, but already earlier prices came. After that they went more deep inside, and after that LOTL zones are created within 75, again 75. See, we have two LOTL zones created. The second one I deleted. Let me tell you why I deleted. This is the one. We have ERC candle, 3 base candles and a drop candle. Among these, which is having lowest body? The leg out candle is having. So let me draw. Why I deleted this 75-minute zone, I will tell you. These are all LOTL zones. Inside 75, another 75 is created. Again within this 75, another 75. Again these two 75-minute zones, again they have overlapped. That means this entire area order flow is there. But in this area the order flow, I have a lot of doubts. I am thinking that this zone will be, the one below will be violated, because the lower time frame, that is 5 minutes level or 15 minutes level, the structure is not good, the price structure. That's why I have a doubt that this zone will violate. Anyway, today we are planning our trade in this area. This is also a 75-minute zone, LOTL zone. Within this 75, we have 15-minute zone. Within this 15, we have 5-minute zone. Let me show you. So let's get into 15 minutes time frame. So within this 75 minutes, even before you look into this, first look into this 75-minute zone. See, here we have all these base candles. We have a ERC candle. And again we have another medium size leg candle. So not comfortable about this structure. We have base candles, but again ERC candle. This ERC candle is bigger than the medium size candle. So almost this is like a leg out candle, that much size is there. So definitely you cannot consider this as part of the base candles. Medium size candle is there. If there are any earlier base candles, you can consider this is part of the base if it is medium size. Assume this ERC candle is not there. This red color candle you will consider as part of the base. But this you cannot consider as part of the base. This is a ERC large candle. So definitely after large candle there should be a medium size base candle. But instead of medium size base candle, yeah, right. But instead of medium size base candle, here you have medium size leg candle. So without a base candle, you cannot consider a medium size leg candle as part of the base. There are higher chances that this zone will be violated. So that is the reason why I am not comfortable with, even if you look into 5 minutes. I didn't actually bother about 5 minutes, but see here 5 minutes also. See here we have a rally candle, 2 base candles, a drop candle. After drop candle, again a rally candle. Between these 2 candles, where is the base? There is no base. So that's why maybe if at all anything we have a drop, base, rally, you can consider this one as a base. This bottom one you can consider as a base. Maybe you can plan a trade, a price action clue based on the price, aggressive trade you can plan. The reason why I am saying aggressive trade, let me tell you, reasons are there. Maybe in my earlier analysis, I didn't do deep analysis, because earlier I have a 75-minute zone is there. That's why I didn't concentrate yesterday when I was doing. But anyway, now let us do this live analysis. There is a magnet. Let me draw in perfect way. See here we have a, why I can consider this is an aggressive trade. We have a drop 5 minutes. This is the 5 minutes. Even your 15-minute structure is not good. Considering this 5 minutes, this because drop, base, rally with a small pro gap. This is the first price action clue. Second price action clue, prices moved up and came, and then from here below itself it moved up near just before this small gap area. That means there is a strong order flow in this area. So by considering this, you can plan an aggressive trade in this zone. This trade is going to be an aggressive trade. What is aggressive trade? A little high risky trade. Why we are calling a little high risky trade? Because we are deviating from our fine tuning the zone technique. We bypassed a 15-minute zone. Why we bypassed a 15-minute zone structure is not good. Even then, price action clues supported us. Pro gap is there and a rejection just before this. See here, prices came. See the rejection before. Rejection means just don't see only a wick. Even see the next candle moved very fast. You can consider both candles together is a huge rejection from this area. Prices are moving up, moving away from this zone. That I am treating as a rejection. See the huge move from here. Rally, rally, rally. Excellent move. That means a strong order flow is there. So that way you can give priority to this zone. But anyway, today our trade was within this. So within this area, let me go to 15 minutes first. See here we have medium size leg candle, a base candle, a rally candle, follow through candle. Good. This zone structure is good. The 15-minute structure. Inside this 15 minutes, 5 minutes. So I am going to 5 minutes. We have a drop candle, 1, 2, 3, 4 base candles, rally candle, again another follow through candle. See today what happened? Today at 11 o'clock 15 minutes, it reached the target. It gave the entry, 9 o'clock 15. Just 5 paisa before this, 5 minutes proximal line, 5 minutes 5 paisa. Generally you keep a trade, maybe this is how much, what is the cost, 9 rupee 20, maybe around 90 paisa before, or close to 1 rupee, somewhere here you would have kept your order, somewhere a little above. And moreover, this is a 1:4 trade. 1:4 point something is there. So excellent trade. And here we have a 15 minutes zone is there, supply zone. Let me go to 15 minutes time frame. We have 15 minutes supply zone. We have a leg-in ERC candle as a leg-in. You have a base candle, and then you have a drop candle. Of course, the structure of this zone is not good. Some kind of sluggish here. Within this area, some movement. But anyway, I cannot say this is a 100% sluggish area, but some kind, because we have all within this area leg candles, and after that prices moved down. See, that's why the zone is easily violated. But anyway, our target is up to this 15 minutes area. But it doesn't have 6.1 ROI, but we have to limit here. You may say you can from here to probably here 6.1 you will get. You cannot say I will exit here, because we have a supply zone. We have to respect that. Or if you want to go for more trade, you have the choice. You can go for trailing stop loss base. You can take the trades, because the distance is small. Before this zone, rally base rally, again drop base rally, again rally base rally here, rally. This is ERC candles. All these are all ERC candles. That way you consider. Or if you go to 1 minute, you get better clarity. See, here you got the entry. Once prices came close to the zone, now you can say we have a rally candle, 1, 2, 3, 4, 5 base candles, again a rally candle. That way you can say. Again, drop, base, drop. In 1 minute you would have exited here itself, within this zone. Sorry, here we have a hidden candle is there. You have a rally candle, 2 base candles and rally. You would have exited here if it is 1 minute. Just before this zone. You would not have got an opportunity to go up to here. First of all, the target itself is small. When target itself is small, going for trailing stop loss, unless a strong supply is there, it will not be helping you much. Anyway, you can't go with 5 minutes. 1 minute level, probably you would have exited here. Sorry, you would have exited inside the zone, not here. We have a rally candle, base candle, rally candle. Or you have a drop candle. This is a supply zone. You would have exited somewhere here, within the zone here. Same profit you would have got. Not much difference. Even if you would have gone for trailing stop loss, your profit is almost same, not much difference. Maybe another 10 or 20 paisa extra profit you would have got. Nothing more than that. So anyway, that doesn't make much difference. But what is the profit we got with this? IRCTC, you got a profit 6,868 rupees, which is 3.8% ROI. So these are the two successful trades. There were few more trades you would have got. One is Naveen Florine. Why we didn't take this trade? Because in Naveen Florine, see here the fine-tuned zone inside this. Naveen Florine is a 75 minutes trade. This is the one. Rally, 2 base candles, rally. This is the one our software identified. Actually, this one is inside a daily zone. This entire thing is very old daily zone. Daily high liquidity zone. Inside that high liquidity zone, we have a 75 minutes high liquidity zone. And yesterday our software identified this is near this zone. The reason is the price is closed near the zone yesterday. That could be the reason why it identified this. Actually, price is closed inside daily high liquidity zone. We have a rally, 2 base candles and rally. So what I did, I fine-tuned this zone. It's very clear inside this. You have a 15-minute zone. You have a rally, base, rally. Inside this rally, base, rally, we have a 5-minute zone. Rally, base, 5 minutes. This is a ERC candle. ERC candle leg-in, base, rally. This is the 5-minute zone is already tested on Monday. This zone is already tested on Monday. See the very big move it gave. Even today also prices went very up. And finally at 10 o'clock prices came down. Once again it gave an entry. But anyway we can't take second entry here. So that's why this. But what happened while giving the second entry? Drop, base, rally. See here. That means a new fresh 5-minute zone is created. You can plan an entry next time when there is a retracement into this zone. Provide. Our software should suggest. Without our software suggestion, tomorrow if prices came into this zone, don't take a trade. It may work, it may not work. If software tells there are higher chances, because software not only calculates these zones, but also it look into the volatility of the market. Based on that, it will identify high liquidity zones. If software point of view it is listed, you can take. If without software, if you want to take your own trade tomorrow, that is a higher risk. Please remember that point. That's why I am telling you, only whatever software is suggesting today, they are valid only tomorrow. Without software suggestion, high liquidity zones, if you are trying to trade, you will be having mixed results. So that is one area you should be very clear. But otherwise, we have a new zone is created. That is the property of high liquidity zones. High liquidity zone, within the zone again new zones will be created. The same area. Now this is a fresh zone. In the next retracement, you can plan a trade in this. And this zone is inside 15-minute zone. That point you should not forget. You are able to identify this zone as a fine-tuned 5-minute zone. Because you have a 15 minutes area is there. Within that area only, this zone has come. So that's why you can give highest priority to this zone next time when our software suggests. Today, why we didn't plan trade? Because it is already a tested zone. And not only that, the second reason why we didn't plan, this price came during the last half an hour. Last half an hour, we don't take trades in general. Even if anybody still wants to plan a trade, your target is only 5 minutes. Even 5 minutes target, it reached. 5 minutes target, it reached. Here, somewhere here, drop, base, drop, we have ERC candle. But hidden body you need to add, you can't add hidden body here. Because this complete went inside this zone. Oh, okay, even if you add hidden, okay, close is here, right? You will get some hidden body. You can consider. If 30% body is there in ERC candle, you can consider that as a valid leg out. So we have a drop, base, drop. So today prices reached during the last candle. Even then we reject this because this zone is already tested. We don't take risk in the tested. fine-tuned 5-minute zones, unless this is a high liquidity zone, because we don't know this is a high liquidity zone or not, unless you verify our supply demand zone chain in our software. Otherwise we may not be knowing about this zone. Okay, this is another area we got prices entered into the zone. The reason why we didn't take trade, these are the reasons. And there is one more, Lalpath Lab also, today it gave an entry. Why we didn't take a trade? First of all, this is a daily zone, daily demand zone, drop, 1, 2, 3 base candles and a rally candle. This is the fine-tuned area. How I fine-tuned? Let me explain. Because next time again when you get an entry, this analysis will be helpful to you. So we have two 75-minute zone identified. We have a rally, 3 base candles, and you have some hidden gap. Some gap is there. You will add hidden body. It is a rally candle. And then again you have one more. We have a medium size base candle, leg candle, medium size, that is leg in. We have 3 base candles and a rally candle. So we have identified two 75-minute zones. Inside 75-minute zones, we will draw 15-minute zones. Again inside 15, 5 minutes. And look into these 75-minute zones. Inside, let us start from bottom. This bottom I didn't find any fresh 15-minute zones. Earlier there was a drop base rally, but this one is violated by this zone, pierced. Because pierced zones we don't trade, I didn't draw a zone. So that means this is not a valid tradable area. This 15 minutes here. This is a 15 minutes area. Sorry, I am showing you in 5 minutes. I didn't draw 5 minutes. I have drawn 15 minutes, but I didn't draw 5 minutes here. How I drawn 15 minutes? Let me show you. So here you have a drop, 1, 2, 3, 4, 5 base candles and a rally candle. After that, again prices came here and picked up the orders, and see the move, big move from here. But unfortunately, when prices entered here, it consumed all the 5 minutes zones and picked up the orders. And after that it moved up. So no more 5 minute zones inside this. That's why the 5 minute zone I didn't draw here. So due to that reason, what I do, let me delete this. Because I want to show you this analysis, I kept it. Okay, this is valid. Drop base rally. Inside this 75 minutes, this is a fresh zone. We have a drop base rally. Inside we have identified this 5 minute zone. Again here, we have medium size base candle, medium size leg candle, medium size base candle, and you have a rally candle with gap. Add the hidden body, some more body will be added, and still big wick is there. So this is a rally candle. And when you fine tune in 5 minutes, actually see 5 minutes I have drawn from here. Let me tell you, this is an interesting point you have to learn. See here, there is a leg candle, medium size, and this is a large leg candle. In between there are no base candles. I can't draw any 5-minute zone here. But this 5-minute zone, below there is another 5-minute zone. Both are overlapped with each other. That is zone confluence. That means zone confluence is there. Zone confluence need not be exactly in the middle of this zone. It can be a little higher overlap at the proximal line, or it could be a little lower overlap with the distal line. So in this example, this 5-minute zone is overlapped with the distal line. And here the actual order flow is there. See, previously it slightly picked up very close, very slightly. Now this time it went a little deep inside. So in this area, because it is already tested, we can't plan the trade. This is a tested zone. This 5-minute zone is a tested zone. Let me delete this 15 minutes. You get clarity. This is a tested zone. Earlier one we can excuse because the reason is just touched. When it is just touched, mostly the second trade will work. That is what worked here. The one below is also one zone is there, drop, base, rally. But this is not overlapped with 5 minutes, 15 minutes. I didn't consider this. Maybe definitely there could be some order flow will be there in this area also. But this is the one we are looking for a trade. This is the inside this 15 minutes. We have a gap is there, had the hidden body. This is going to be a leg candle. We have a leg candle, 2 base candles. You can consider this as a rally candle. Rally candle, not very great leg out, but okay, we can consider rally. Follow through candles are there. So you can draw a zone like this, exactly within this 15 minutes area. So this is the area where we are planning for a trade. You may ask a question, rally, base, why can't we take a trade? Because here I am not convinced with this leg candle. See, this is a bigger one, but this is a smaller one, medium size leg candle. So I don't want to give this zone a priority. This one, okay, a little bigger than medium. So I gave, as a benefit of doubt, I gave priority to this candle because after that follow through candles are there. But today prices did not come here. Instead, they reached this already tested 5-minute zone. Because it is already tested, we don't plan the trade. We didn't plan any trade. Because always we look for a fresh 5 minutes zone. I mean, fresh fine-tuned 5-minute zone. We should not forget the word fine-tuned. Because fine-tuning is the most important word in our high liquidity zone analysis. See today, the 5 minutes zone, again it gave an entry, but slightly pierced, but this is within stop buffer area. We didn't take a trade. If anybody would have taken a trade, it would have been a successful trade for them. But even then, 15 minutes target it didn't reach. See here, this is the 15 minutes target. The reason is very simple. This zone is already tested. It didn't have enough power. Maybe some few pending orders are there. Those pending orders are consumed by this existing supply. Supply is also weak. Demand is also weak. But by the time the supply is consumed, the remaining demand couldn't able to push the prices up to this 15 minutes area. Came very close. Today it struggled till the last minute. Prices didn't get into this area. But anyway, we didn't plan a trade here. Because this 5-minute zone is tested zone. And apart from that, what else we are yet to see? Another one is AU Bank we have seen we got a trade. IRCTC we have seen we got a trade. Naveen Florine we discussed. We got a trade, but we didn't take the trade because that is a tested zone. And another one is Coromandel. Coromandel is the last stock. This is a 75-minute supply zone. And prices came very close to the fine-tuned area, but it didn't reach. That means we slightly missed the trade. Even if we add the buffer, entry buffer, before your entry, some buffer also if you add, still slightly it missed. Because maybe another 3 rupees or 2 rupees, if it would have moved up a little, another 2 or 3 rupees up, you would have got a trade. Narrowly we missed. That means in this area, very strong order flow. See, previously also, just before entering, a strong order flow. If at all, if prices enters, you would have got a very good trade in this zone. Okay, anyway, we missed the trade. I mean, we didn't miss, we didn't get an entry in this trade. So this is about high liquidity zones. Hope this information is useful to you. Let us all meet again in our next video. Thank you.